Let's get into some of the details. It's my pleasure to introduce Kevin Lindemer, who's a vice president with S&P Global Energy, who's going to present some of the key findings from the report. Kevin?
Thank you very much, Kevin. For those of you who may have been wondering, I was one of the people waving a couple of minutes ago. This study, well, it's very thorough, and it lays out how the future can evolve or could evolve, but it also raises a lot of questions, and there are a lot of issues that this opens up that will need to be addressed as we go along because of there are cause and effect. There are many other things that people are going to start thinking about as they look at it. So the first thing I want to do is introduce my colleagues, our project team, Juan Sokoto, who leads our agricultural consulting business, and Emerson Wollenberg, who is a director in our ag consulting business. And they'll be assisting here with questions and answers as we go forward. Now, to put a little context around what we're going to show is our study was two scenarios. One is, we called it the base case. That scenario represents standard or S&P Energy and Agriculture's base scenario. This is the one that we base all of our analysis on, so you'll see that. The second scenario we call the optimized scenario, and you'll see that word in the next few slides. And what the optimized scenario is it's basically technology uptake by agriculture and not limited by demand for agricultural products, whether it be food or fuel. So you'll see a potential for what agriculture could do, and you'll see our base case. Now, we've all been through, over the last several years, the overused word peak. So how many of you remember peak oil? And peak oil meant we're running out of oil. Where we are today, though, is peak something completely different. Markets work, and as a result, what we are looking at today is we're no longer at peak oil. We have as much as we probably want. We are not at peak food production. We're not constrained by demand from agriculture. We right now may be looking down the barrel of peak population in the not-too-distant future and peak food demand. Something that has not peaked and we believe may actually accelerate is efficiency in agriculture and energy and technology. And there's something else that probably won't peak, and that is opinion and debate after we present this work. So here's what's driving this. There are three big driving forces that we've identified as driving the market. One is that, as we've heard before, population growth is decelerating. We are now, in fact, there are some studies today that say we might actually have passed population replacement levels and fertility rates. And if we haven't, it's going to be very soon. The second is that energy demand, particularly oil demand, is declining. Thank you, Kevin. I forgot all about this little thing here. Is that our fuels demand is peaking. And the third is agricultural productivity is outpacing the demand for food and for fuel. So the new advancements in technology that we'll talk about here at a high level in a few minutes these are the three big drivers that are pushing this study, and we believe will shape our industries going forward. So the supply-demand balance is leading to agricultural surpluses, and you don't have to look very far today to see some weak signals out there that we are already beginning to see this happening. Falling crop prices and margins, that's one of our weak signals. Our commodity prices are low, and I was talking to somebody earlier who, back when I was a farmer in Minnesota, it was a long time ago, that we may have inflation-adjusted prices that are probably as low as what we experienced way back then. But biofuels are a scalable catalyst. In other words, when you have agricultural surpluses, we have a choice. We can rationalize capacity, which is what every commodity industry does, or if we have the opportunity to find new markets and create new markets, that is where we are headed. So the key point here is that we're not in a world that is supply limited. We are in a world that might actually be demand limited. So looking at population, this is one of the big trends here, is that we're looking at population growth really slowing to about less than 0.5% per year. And there are some new studies that are coming out that are suggesting that that slope might be even slower and moving toward us at a faster rate than what we've modeled here. And to give you a couple of examples here, you look at China, for example. China, the population will be losing about 10 million people per year through 2050. So China's already peaked in population. And I give you another example is the fertility rate in Mumbai, India, is the same as the fertility rate of the country of Finland. So if you think this is something that is limited to the OECD developed countries, it's not. This is worldwide and is getting a lot of people a little bit concerned. But for us in the United States and the European markets, that is the case, is that we are looking at falling populations. When you look at what the effect of falling populations really has and slowing population growth, you look at the right-hand slide here, is that this is global meat consumption, and the two segments of the bar are how much, the dark blue is how much more meat products were people eating per person for everybody who was alive during these times. The light blue is just how much more meat demand are we adding because of population growth. And you can see that we are right now looking at a period where the amount per capita meat demand globally is falling to nearly zero or very, very close to zero. Now, keep in mind, when I make ethanol, we're going to get more feed, and we make soybean oil, we're going to get more feed. So as we increase biofuels, the inflection point for us for agriculture is what do we do with the meal if animal feed demand is now slowing to only the rate of growth in population, which is, again, around 0.5, 0.4, and like I said before, it might actually be stronger than that. To give you an example, the corn yields over the last 35 years have increased an average of 1.5% per year, and you'll see in a minute that this may actually be accelerating over the next several years. We heard a lot already today about E15. E15 is an important development for increasing corn demand. By 2050 or so, E15 would represent about 6 million acres of corn compared to if we stayed at E10. So if we could have E15 year-round, it's 6 million acres more. But when you look at this slide, the falling oil demand that we talked about before is overwhelming the impact of adding E15 to the gasoline pool. You might also add that this isn't unique to ethanol and gasoline. This also applies to diesel fuel as well. So as you look at this is that, well, E15 to support agriculture is a step, but it falls very short of, as was pointed out before, a North Carolina equivalent decline in corn acreage in order to balance the market for supply and demand without increasing ethanol or biofuels usages. Now, is the technology there? Yes, but there is even a lot more coming. When you look at the yield contests, and growing up as a kid, I always liked these things because we were farming and we were getting 125 bushels an acre in a good year, and we were just really so happy. And then we hear about these guys down in Illinois that are doubling our yield, and we're going, gosh. But then we found out that it costs a lot to do that. So where we are today is that you already have practices and technologies that are taking the yield contests up to almost 600 bushels an acre. And this doesn't include the technologies that we see coming that are really accelerating that bottom line. So the technology uptake from the blue line down to the orange line, it's been slow. But now when you start looking at some of the other things that our study has shown, we believe will increase that orange line. So here's what it looks like. If in our optimized scenario, if you want to maintain corn acreage at around 98 million acres, then you need to find a market for another 8 billion bushels of corn from today out through 2025. The difference here between the base case scenario, the blue line, and the orange is about 40 plus bushels an acre in the total amount. What is driving this is, well, we have 5 factors. There is advanced breeding and gene editing. There's digital farming and robotics, regenerative agriculture, which you've heard about, AI, enhancement of current technologies to accelerate new development, and then new technologies and practices that are not yet in practice or not yet discovered. And it's important to recognize that where we are today, there are a number of those factors that didn't exist 25 years ago that we are using today and take for granted. So when we go to what does this all mean for how much ethanol could we produce? And we stuck with ethanol here. In the optimized scenario, we could go from the current level of about 35 billion gallons worldwide up to 140 billion gallons by 2050. Again, if you could adopt the technology in agriculture and you're not limited by demand. So if supply could create demand, we'd be up to about 140 billion gallons. And the same thing is happening over on the oilseed side. But because yields are lower, it's a harder thing to deal with. It's still about 170% increase in the amount of biodiesel, renewable diesel, or HEFA-based SAF that could be coming into the market. Now, we heard about the 940 billion gallons. Here's the number we really want to emphasize here is that our view today is that oil demand worldwide is expected to fall about 8% between now and 2050. Now, that's global. But here in the U.S., which is what we're focused on right now, even though this is a global problem, in the U.S., before I go to U.S., globally, gasoline demand underlying that would fall about 23%, 24%, and diesel fuel demand worldwide is also falling, we expect, by 11%. In the United States, while we have growing possibility of supplying more and more ethanol, gasoline demand in the U.S. over the next 25 years could very well fall by as much as 25%. So when you look at, we're generating the potential to produce more ethanol, a lot more. Over on the fuel side, what we're saying is the industry and gasoline and fuels demand is declining. Now, where do we have opportunities? The opportunities can come from jet fuel with sustainable aviation fuel, either oilseed-based or alcohol-based. And also, there's a lot of activity today looking at the marine applications for ethanol. Well, one thing I want to just close with here is that for us at S&P, this study is really it's a reflection of work that we've been doing. It's new research, and it's creating for us a lot of unanswered questions or questions that we believe will need to be answered. And we're working on those today. And just to give you a couple things is, what is the implications for the fuels business and fuels distribution business? What about the potential for aviation fuels or for marine fuels? So we're working on And we're getting a lot of questions from you and a lot of other folks in the industry about this. Is getting a lot of attention. So we continue to work on trying to answer these questions and understand what the implications are. And with that, Kevin, thank you for the time, and thank you, everyone. There is a white paper and a lot more detail and supporting information behind this. So a 15-minute summary. It doesn't do. It gives you a peek. Thank you.